right. Welcome, everyone. We are going to give it about a minute while everybody joins. Excited to have you. Wait until we get a quorum. While folks are joining, I'm just going to set the table a little bit. If you have any questions, please drop them into the Q&A. I'll be watching while we're going through the webinar, and I'll make sure that Spencer and I address the questions as they come in. So go ahead, ask your questions as soon as you have them, and we'll be watching and respond to them. All right. Well, I'll give it 10 more seconds. Spencer, while we're waiting for everybody to jump, why don't you let everybody know a fun fact about you that they probably wouldn't know, right?
Okay, well, welcome everybody. Glad to be on board. Thank you, Richard, for asking me to be a part of this with you. My name's Spencer Shiffman. I'm with Lead Mailbox. Been with Lead Mailbox pushing 20 years now. My best friend's the owner. My best friend since we were teenagers. We're now in our 60s, in a good way. We launched Lead Mailbox back in 2003. The whole idea to help lenders better manage and track their prospects from the time they get a name to getting them into the funded process. And on a side note, avid golfer. You can find me on LinkedIn. I'm a 4-time cancer survivor since the age of 24. I'm now 64, so 40 years. Battled 4 different battles with cancer and beat them all. And my story's been written about quite a bit. I've done a lot of speaking across the country over the years as well, and just glad to be alive and be online today with everybody.
Spencer, that's incredible. I just learned about that actually in the planning for this. So congratulations. That's fantastic. My name is Richard Grieser, Chief Marketing Officer here at Monster Lead Group. We're doing this because we have a lot of common clients who get a lot of value from using both of our companies' technologies together. Monster Lead Group, in case you didn't know, we're a direct marketing services company. A lot of people know us as getting leads from mail, and they use our leads very successfully with Lead Mailbox. And so that was the genesis for this. And so now we're going to talk about a little bit about best practices with mortgage lead generation, management, and conversion of those leads. So thank you for joining us. If that's what you came for, you've come to the right place, everybody. Joe says, amazing, Spencer, bless you. And Joe, you're absolutely right, man.
Thank you. Appreciate it.
That's, I believe, Joe Deling from Silverworks. All right, let's keep going. I'm going to share my screen, kick us off. Can you see my screens, Spencer?
Yes.
Excellent. All right, let's jump into this. I'm going to real quick just I have just a couple slides here, everybody, on the market and where we are. We're in a high rate environment. We continue to be in a high rate environment, even though September was nice and it came down a little bit. I think a lot of you probably saw if you're on LinkedIn or maybe it's at your own lending company, that a lot of lenders had a really good September. Whether that's attributed to the team or the market, you can judge for yourself. But we did have a nice September, and I think most people agree that rates are probably going to have a little bit of dips and plateaus, valleys, dips, that kind of thing, but probably going to stay around 6 or so for the time being, right? There's not going to be some giant drop in rates. Spencer, you have anything you want to add here?
No, that's the consensus of all the lenders that I've spoken with over the months. That seems to be the consensus. That we're hoping that as we get into maybe Q1 of 26, that they might dip into the fives. In fact, I got a slew of clients that went inactive that are saying, hey, when the rates drop below 6, give me a call. We'll reactivate and get going again. So that's fingers crossed. Let's get it into the fives if it's possible. Yeah.
Cool. I think everybody's aware of that. Credit card debt. I think this is it's really important, especially for consumer direct lenders, to understand that credit card debt in the US is skyrocketing. In doing some research, I've found some incredible statistics. First of all, we're at 1.2 trillion in credit card debt as a nation here in the US. And what blew my mind was 1 in 4 Americans are carrying credit card balances over $10,000 right now. That's revolving debt, not like they're spending that and paying it off every month. That's sitting on, high interest credit card debt that just sits there. And guess what? That's all opportunity, right? And we're going to get to the why in just a moment. Home equity, another record breaker here. We're at 35 trillion in the average home equity and average homeowner. I'm sorry, in total home equity, and the average homeowner has $302,000 in home equity. So a lot of opportunity here to help address this the debt that consumers are facing right now, and it's opportunity for the lenders here. So I'd say we're in a home equity extraction super cycle. I didn't coin that term. I stole that from somebody on LinkedIn, just so everybody knows. Uh, but I like it. I think that's exactly where we're at right now. And you can see it with the type of loans that are being done. Lots of HELOCs, a lot of home equity leverage loans. Um, let's talk about who's in the money. So right now, our company, Monster, we're ravenous. We're ingesting so much data right now. But I love looking at this. This is on the right side. You're seeing how many borrowers are in the money at different interest rates, right? And for every dip in 30-year mortgage rate thresholds of like 0.75%, you will see, or 75 basis points, you will see um, big waves, refi waves come. And I believe we just saw one in September. And that's why you're seeing, a lot of lenders posting these great months in September because rates did have that dip. We actually did this calculation where we looked at how many you marry it's not just how many homeowners would benefit from like a lower rate, but also how many have high consumer debt. And right now, how many borrowers are like in the money in the country? There's like about 14 million, and they all fall into different buckets that I'll get to later on in the webinar. And you have anything you want to add to that there, Spencer?
No, it's interesting. That's an interesting graph. I was looking to see actually where I fit, so it's pretty cool.
Yeah. Yeah, it is really interesting. I don't think any of us are going to see the threes for a very long time, but like you were saying, fives definitely, I think that's definitely doable. And you can see there'll be huge refi waves that come from borrowers, especially borrowers, anybody who bought a home ever since rates went up in 2022. All right, let's
Yep.
jump into our first question here. You know what, actually, before we do that, I'm going to take a temperature check of the audience. Spencer, let's do this together. This is be a quick poll I'm going to run for the audience. Let's launch this just so I can take a temperature check of where everybody is. There's four quick questions. They're just multiple choice. Spencer, you and I can't answer. We're panelists. So let's just hang on a second and see if any of the folks in the audience can just quickly tick off four questions. What's your biggest challenge with lead generation right now? Good. We're seeing stuff come in here. What percentage of inbound calls do you pick up? Super important. And I love seeing that, what I'm seeing right now. We'll get to that in just a second. Do you have a call answering service? Like when an LO or another team member can't pick up? That's a really interesting fact for us to know too. And finally, where do most of your leads come from today? Yeah, we have a couple of different options there: direct mail, Google Ads, lead aggregators, social media, internet leads, hot transfers, that sort of thing. Um, I'm just going to give it a couple more seconds. And thank you everybody for participating. I think it's going to be good for everybody who's here in the audience to just kind of see what's going on with the group. Almost there. We're at over 50%, I just want to get it over at least 60%. One more person, hopefully. Am I going to get it? Am I going to get it? That's all right. We'll end it now. And I'm going to share the results. Give me a second. All right. So we asked four poll questions. What's your biggest challenge with lead generation right now? It looks like the winner right now is poor lead quality. By far the winner, followed by high cost per lead. I don't think that's any surprise to me. Spencer, what do you think?
Yeah, I would say, yeah, a lot of the loan officers that I'll talk to on a daily basis will say poor lead quality wherever their leads are coming in from. We kind of discussed that a little bit on what their best practices are and why it's a poor lead, if it's truly a poor lead, and I kind of qualify it a little bit more, but it's valid. High cost per lead, yeah. I mean, definitely leads are more expensive when the market dictates the supply and the demand.
I
inbound calls you pick up? I mean,
I think for me, when I look at poor lead quality and high cost per lead, I actually think they might be the same thing for a lot of direct to consumer lenders, right? Because how does a direct to consumer lender judge lead quality? Usually it's their cost per acquisition. So that is high cost per lead, and that's how they're judging the lead quality. So those two being selected to me makes perfect sense. It might not be. Maybe there's other types of judgment for a lead that other lenders have, but by far the most that I talk to, they judge it by cost per acquisition or cost per funded load, something along those lines, right? Um, what percentage of inbound calls do you pick up? I love seeing that majority are picking up 90% or more. I'll tell you right now, if you're buying any type of lead and it's an inbound lead, that is the most impactful in your funnel, if you think about it, right? Because you have the biggest numbers there that you can impact in ROI for any of the lead sources that you're buying from. Just pick up the phone, and you'd be surprised how low some lenders are, and we can see two of them here that are at around 60% and one that's under 60%. Um, so that's a huge opportunity for improvement, right? Look at it positively. Um,
Richard, can I interject just very quick on the inbound calls with lead mailbox in case anybody doesn't really know? We can set up, for everybody's phone to ring within our platform. We can set up to ensure that a phone call is going to get answered with our platform. So I just wanted to interject that.
how do you do that? Was that with an answering service, or I'm just curious?
No, I mean basically with the call in number on the direct mail piece, we can if it's we can set it up that with the lenders to ring everybody's phone as a call comes in. No answering machines. You want somebody live to grab a phone call when a call comes in. So or if somebody even had a call, we can or was not available, we can ensure that only available loan officers that are ready to take calls are get those calls. I mean, those are just some of the mechanisms within Lead Mailbox that we can establish.
Yeah, it's good to kind of run the shop like a doctor's office. You have different folks on call during the off hours, essentially, right?
Hmm.
So where do most of your leads come from today? This is the final one, and it looks like the majority is lead aggregators, and that makes me happy because direct mail is not even nobody selected direct mail. So hey, maybe there's some opportunity to work with us. Reach out to me if you want to talk about that. So look, I'm going to stop sharing, and lead aggregators, internet leads, seems like the where most people are getting most of their leads from right now. All right, let's jump into our first question here, Spencer. How should direct-to-consumer lenders allocate budget?
You throwing that one at me?
Yeah, I'm throwing it at you. I'll take a stab at
Okay.
it afterwards, but you can take a stab first.
Okay. Well, I mean, I have the conversation with every sales call that I have with lenders, loan officers, lenders, how they should allocate. I mean, obviously, it's what's their day like? What's their business day like? Some lenders that are just buying all purchase leads will get minimal number of leads per day, whereas the lenders that are buying both cash out or HELOC leads along with purchase leads have more volume. So it's all based on obviously your budget and who can work those leads to ensure that they're going to, especially internet leads, are going to be, for that first sales call to have that opportunity against competition. So how are they allocating budget? It's really within each office to design where, what's your referral business like against everything else? What's your marketing? And those are just questions that I ask the lenders when I'm sort of qualifying what their needs are. Generally, when they're going to buy internet leads, I always ask the question, where are your other leads coming in from? Are you doing direct mail? Are you doing social media? Are you doing, it's realtor content, realtor referrals? And just it's what's in the scope of their day and how they can make sure. I mean, I'll always kind of follow up with, you're going to buy internet leads. That's going to be your primary focus against the referrals and other types of leads because of the amount of money you're spending on that lead itself, whether it's a live transfer or a shared lead. So I kind of I help put it all in perspective, which will help them create a budget per se.
Yeah, totally. I love that. For me, I think a lot of it has to do with your cost per acquisition, with your existing leads, what's working and what's not. And I'll get into that later when we start showing talking about KPIs. But for me, you've got our company, we've broken down 5 reasons why people do a refinance. equity access, term reduction, payment reduction, risk reduction, and equity conversion. And we run campaigns under each of these. And I think a lot of lenders who are buying internet leads are already allocating their budget under some of these different motivations for borrowers to, for example, if you're buying HELOC leads from one of the internet sites out there that's selling them, you're doing that right now, right? Like a consumer is out there pricing a HELOC and requesting information from you. You're doing that already. I would say that we're the only one that really knows the country in terms of who's in the money for each of these different reasons, can put your specific market programs that you offer, VA, FHA, conventional, and all the different, EARL, streamline, cash out. We put them all right underneath each of these bu five buckets, and that's our specialty. So, there's a lot of folks that are unserved. Not everybody's on the internet, for example, and going to some of those sites that all of us know. And so, we offer the mail. I think mail really offers the ability to go after the entire market and do in very highly targeted campaigns, very successfully. Um, all right, let's jump into our next one here. Spencer, I'm going to ask this question for you. What are the most common
Mhm.
mistakes mortgage lenders make when managing leads, and how can technology help avoid them?
Well, believe it or not, there's still loan officers out there that work off Excel and get leads via email and then they turn around and say, well, the lead quality is terrible. And then I'll say, well, why is that? And try to investigate. Well, I wasn't the first call in and da 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 da. So this is right into my playbook per se. But, you want the automation when you're buying internet leads, especially. You want the technology, email, text, whatever, even to help connect, to engage that borrower, especially if you're competing against other lenders. Even on an exclusive lead, you don't know, even on a share lead or exclusively, you don't know if that borrower might be talking to the neighbor next door saying, call my mortgage broker, they did great for me. So there's an essence of, hey, I need to talk to this person ASAP to show them what I do as a professional to close them per se. So you got to have if you don't have a lead management system in place and you're buying internet leads, you're losing. You just throw your money away. And I've proven it over and over and over again.
Yeah.
That you just need that technology to engage.
Yeah, I love it. I think for me, I kind of break it into a few parts. One is, do you have a process in place for each of your lead sources? A specific process that is, if you have a big team, everybody's following every single time. But for example, for our, leads that come from us, we have a very specific process, and you got to start by asking for the reference ID. You want to pull up and you want to see the actual in your system. You can see the actual piece of mail that the borrower received and a lot of other data. It's amazing. You get to see first, second mortgage history and all of that. And then it's very impactful to conversion, right? If you establish upfront in the conversation with the borrower that credibility that their given situation, and there's a reason why, like that wasn't willy-nilly, that piece of mail that the person received. You would then own the conversation from that point, and you can steer it in the best manner that makes sense for the borrower. I would also say outside of process is being able to look at your funnel and see your conversion and compare it to benchmarks, right? So like I think that's really important, and you should be able to do it by lead source. I mean, you might find that, using the reference ID example I just gave, you might find that some of your team, some of your loan officers might be asking for the reference ID while others aren't, right? And so and then maybe that those loan officers have lower conversion as a result. Well, that's a great moment to do training or retraining. So I think one is having a process in place, and the other is really knowing the conversion of your funnel and seeing where you can improve, and doing it by lead
To your
source.
point on that, Rich, if I
Yeah.
may, so in lead mailbox for direct mail, there's a specific database section to load the direct mail data with the header having the reference ID number, last name, and so on. So when the call comes in, it's very easy to pull it up, pull the borrower up, and then convert them into a live lead either work the lead, however the lender's doing it, having telemarketers field the calls, or the loan officers themselves, but it's very easy to transfer that lead to a live loan officer or the loan officer to take it live and start qualifying them right there on the spot. So it's very simple with our platform on that.
Love it. And Danielle gave a plus sign, and I'm going to think that she gave it for your earlier part of the answer. I'm not taking credit for that. So there you go. There you go, Spencer. You got a plus sign from Danielle.
Hot diggity, thank you.
Diggity. Made your day, right?
Hmm?
How can lead scoring and routing rules be optimized for a call center team to improve speed of lead and conversion rates? What do you think, Spencer? You want to take a crack at this one?
Uh, it's really the oversight, having the ability within the platform to, check the progress. How hard is the loan officer working the lead, getting it to the funded status, if you will. It's really oversight by management to ensure that people are working hard and making the most of it.
Yeah, I think for me, the lead scoring is really important. We use AI to do that in our call summaries. We'll go through and give a sentiment analysis on whether it was a positive call, and then we are extracting taxonomies from the call to see whether what the outcome was, and we can put it in different stages of the funnel. So the higher priorities definitely should be getting more attention, right? And then we even give follow-ups and not just follow-ups, but we give templates to follow up to the loan officer that are like, hey, here's the next steps, and here's the email to the borrower to kick off those next steps. Pretty cool.
Yeah.
Um,
And that can all be tracked, and you can customize statuses or use standard statuses within Lead Mailbox to basically have management run reports and say, okay, here's where we're at as of right this second. How can we improve on it? So that's the reporting mechanism is very important too.
so when we definitely said speed to lead, I think everybody knows is important, right? When someone faster you can get to the lead, the better, and the higher the conversion. That's proven across every industry, by the way. Um, but not just speed of lead. What we talked about earlier in that poll question, open rates. I'm sorry, answer rates. Um, if someone calls, they're in pretty much in market right now to have the conversation right now. If you the and it declines the longer you go after, let's say they leave a message and you need to call them back. Look, at least taking the message and calling back is better than nothing. So one of the things that we definitely help with is every single day, immediately when there's a missed call, that there's a note to the manager and to the loan officer saying, hey, this call was missed. You should call them back right now. So you should at least have those kind of processes in place. Um, Spencer, what are the best practices for nurturing leads they're not ready to convert like right now? So like this is definitely your department, right?
Right. So when the prospect borrower is not ready to commit today per se, they go into a nurturing drip campaign on the scheduled follow-up calls by the loan officer. So we supply this for our clients. We build out drip campaigns. One for internet leads is called early marketing to help connect ASAP. And then long range. Long range is basically, again, that borrower not ready to commit, but I want to make sure that they don't forget me. So we set up strategic drip campaigns. Our marketing director on our side, Bob Price, brings, 30 plus years of mortgage marketing best practices expertise to Lead Mailbox, which we relay to our clients to help them. So we set up the strategies of, how often should you stay in touch via phone on top of the outbound drip marketing that's keeping my name in front of the borrower. So this is part of our setup process, the strategy of nurturing when the borrower is not ready to commit today.
Oh, that's great. And I'm sure each of those processes you just mentioned are attributed to like a reason why the borrower is not ready right now, right? Like if someone's credit's not there yet, then there's a process right there to help them get their credit improved over time, right? Like not just that, there's a lot
Absolutely.
of different reasons, right?
Purchase leads, I haven't found the right house yet. I'm not ready to get pre-qualified. Refi leads, hey, I'm watching rates. Yeah, it was a good September. I mean, these are daily conversations. We're hoping the Fed drops or the lenders are looking at the 10-year bond, the 10-year Treasury bond, I think, is a benchmark. But there's multitudes of reasons that a borrower might not commit today, but it still leaves the responsibility of the loan officer, as that professional salesperson should be, to do their absolute follow-up and keep their name in front of them, keep calling them, to build the relationship so that when time finally, I'm ready to make the move, great, let's get it going. And that's sales 101.
And I think there's a real honest conversation a lender should have when they think about, hey, if I have this lead source and it's giving me a lot of leads that aren't ready to convert right away, but maybe they are a little bit farther down the line. I think that's that should definitely factor into your analysis. Like maybe some leads are longer term than others, you know what I mean? Before you can actually judge them for ROI. I'm not saying that our service is. I'm just saying that I've seen that for other lead sources for sure before, with someone's early in their journey and they're just basically getting started. They want to just learn a little bit more by talking to a lender. How should call centers use data from their CRM or a lead management system to be more efficient?
You throwing that at me? Back at me?
Yeah, Spencer. I'm gonna let you get a crack at most of these to start with. I think
Yeah.
you're doing this all day, man.
Well, I mean, again, from the admin perspective, working within Lead Mailbox, they're analyzing, again, the status of where every lead sits within the platform. And basically, they can create rules that, one, if a loan officer sort of lost track of the lead, hadn't worked the lead, to have it reassigned to another more energized loan officer if that's the case. So we can set up those kinds of rules, and that's within the platform. But it's really basically checking every lead, the status of the lead, where that lead sits, and then asking the questions. Why hasn't moved from say, a conversation to app taken or to funded or to whatever? And that's just that's again, utilizing today's technology against the old days where you just really didn't have those analytics.
Yeah, I mean, definitely. And I would say from an efficiency standpoint, I just can't imagine someone's not using AI at some point in their daily tasks. I mean, I use it so much these days for call summaries, follow-up tasks, automatic scheduling. Like these are the things that it's starting to get very error proof, like it's just really good and seamless. It saves me so much time. I think it's happening across all industries, right?
Well, and to that point, and I was talking about this with Rick the other day about using that. We've got AI coming in to Lead Mailbox for voice and text for the most part, and our developers actively getting that ready to launch. But the question comes up when I do a sales call. Certainly with direct mail, using AI is absolutely awesome because you can really create that AI to do a lot of the road work for you. On internet leads, it's different. I'll say to a loan officer, if you're buying internet leads and you're going to try to use AI to close a borrower in the first sales call when you're competing against other lenders, I would rethink that. I mean, I would not depend on AI because every borrower is going to have a unique circumstance, and I just don't know if AI is going to be able to answer it in a more humanistic way than saying, okay, so what you're saying to me based on the AI response is X, and you're looking for X. Like working in a chat room type of thing. So AI is going to be certainly the next generation of our world in all industries. You're right, Richard, to there. In the mortgage industry, how you utilize AI could certainly dictate how it pays off for you. And so
Yeah,
you
I
could
agree.
use AI. Yeah.
I think it's in the follow-up in your example. It's in the follow-up, not in the conversation or with the borrower or anything like that. I mean, you need to really find out about their goals and their situation, for sure.
Yep. Yep.
I mean, the last is okay. You've bought these leads, you're managing these leads. What KPIs in terms of like reporting optimization, showing you're getting good ROI to to those powers that be in your organization, like what KPIs matter most? And Spencer, you can take a shot at this. Mine is pretty simple.
Well, I would say funded. What's the funded status?
Yeah. I
Close,
actually
close funded.
so I like that a lot. Like that would be cost per funded essentially, right? Like what's your cost per funded or what's your funded status for these leads? I agree with that. The thing, the what I struggle with a lot of lenders is that the pull through rates. vary so drastically amongst lenders. You know what I mean? From application to funded loan. I just see it. Some folks are in the 80, 90 percentile, and some of them are down around like 50%. And some of them are just vary a lot just by the leads that they're buying, right? Some of them will have, get a lot of applications, but none of them turn into funded loans. So, what I usually coach my clients, our clients, what we usually coach our clients is, evaluate them on cost per acquisition, or like a volume multiplier is actually another lens you should have too. So I'll explain that. Cost per acquisition is cost per application, right? If you don't, because most of your leads, the problem is going to be after application is going to be like a sales process, or sales, or your sales team, or a process improvement that needs to happen after application, unless there's something inherently wrong with the lead source, right? Um, I think that the volume multiplier is interesting, and a way to look at it, because it takes into account the loan size. So you're basically looking at the total volume you're funding with these leads, right, and dividing them by the number of by your the number of leads you're getting, and you get this multiplier. And I think that both are good views for people to be looking at. But in general, I would look at your cost per application, and that's docs out, right? You're taking an application, you're sending a loan estimate to the borrower, that kind of thing. From that point, you should really get a good understanding of how it compares to the rest of the leads that you're buying. And I would honestly, back to the earlier question earlier, it's a lot of the way I would allocate budget, right? If you're in a good, you should know what a good number is. Yeah, that's the happy green face, where you just, when you're at that number or below, you increase spend for those leads, right? And if you're in the yellow, you probably stay in the middle and try and get it to the green, right? And if you're in the red, that's where you cut. That's where you say, okay, this isn't working for my business, right? But you should know the dollar amounts for all of these faces, like smiley faces here on the screen, all these different colors. You should know your number for what's tolerable and what's not, and what you should double down on. Everybody, that is all of the conversation that Spencer and I came here to share with you. I hope you guys got a lot of value out of it. We'll stay on for a little bit longer if anybody has any questions. There's still a full audience, so I hope you guys all got a lot of value out of it. I enjoyed it. How about you, Spencer?
Oh, this is great, Richard. This is awesome. Really glad to be a part of this today.
Danielle wants to know a little bit about Monster Leads. I'll just give a quick answer. Danielle, Monster Lead Group's the leader in direct response marketing. That's essentially mail leads, as most people know them. We know the entire U.S. population. We know whether they're in the money or not, for one of the different reasons that people do a refinance or a HELOC. And essentially they're inbound leads, where we do the mail campaign soup to nuts, from targeting, setting up the audiences under your programs. We work with you on loan amounts that work for each of your marketing programs, and we make the phone ring essentially in your operation. And then we work with you to make sure you get to optimize and improve your conversion with our leads. So we're the leader in the space, and I'd love to talk to you sometime if you're interested in learning more. Any other questions, anybody? Oh, here we go. Joe, what's up, Joe? Richard, what all of the ROI components to figure out cost per lead? Lead cost, CRM, and POS. I'm looking at straight up marketing, Joe. I'm not looking at when I do ROI, calculate ROI for a client. You're absolutely right. When you're calculating ROI, you got to look at your fixed costs. You got to look at the cost of all the different software that you're talking about, like your CRM and your POS. But when I'm talking about CPA, I'm specifically talking about the money you're spending on the marketing. The rest goes into a factor for your ROI calculation. We have our own, and usually I start with what's the margin that a lender has on a loan, right? Like, and we do it from average loan size. So, if it's 2% or 2.5%, then you got to make sure that there's ROI, there's return on their spend. Um, Thank you, Joe. Let's see here. Danielle. Yes, let's talk later. Danielle, I'll follow up with you. That's great. Um, Brandon Dominguez, no questions. We'll be happy to set up a call by your services. I should write this down. I was not expecting this. This is great. Danielle, Brandon, absolutely.
If I could throw a plug, if anybody's interested in Lead Mailbox, uh, leadmailbox.com, Spencer at leadmailbox.com is my email. You can find me on LinkedIn. I'm everywhere.
Love it. And you can reach out to me. I can connect you with Spencer as well. And if you wanted to, I would even do a joint demo with you, Spencer. We could figure that out if we had to.
Cool. Jason Dupree. I know Jason Dupree.
Please reach out about monster leads. Oh, nice. Jason, I got you. Cool. Well, everybody, thank you so much. I'll give it one last, let's give it, it's 1:36. Let's give it to about 30 seconds or so. You want to give a final thank you, Spencer, for everybody?
I'm just so honored to be here. Thanks, Danielle. That's pretty awesome. It's all good. I think next year is going to be a better year, and I think all the lenders out there are grooming for it. And we should all stay healthy and prosper.
I love that. It's a beautiful way to send us all off. Everybody, thank you for coming and joining us. Have a great day.